Perfect. So let's start this session off. And top of the hour, first and foremost, I want to wish you all a very happy, prosperous 2025. We're beginning a brand new calendar year, and with it, okay, comes a lot of hope, a lot of promise, and the expectations, okay, of doing bigger and better things, more bigger than what we did in 2024. And as we set off and we start doing this, I want to wish you the very best, okay, on this journey onwards from January to December, right? The calendars have changed. The markets are still the same. The Nifty, the Bank Nifty, okay, with all those changes, okay, which have come through from October, November, December, posing an additional challenge for us. But, okay, we'll overcome all of that. And we'll talk to you today about the need of a proper working process, about how, okay, with a proper process in place, you can, okay, negotiate the challenges which are given, okay, by markets. So today, okay, like I said, okay, was a relatively easy session, at least for all of us in the VMR. Okay, the bias was super clear. The way of working was super clear. The market was bullish, and it's always, okay, an easier market to trade when it is bullish. But we'll be having tougher days ahead, okay, as we had in 2024, and there are going to be a lot more challenges. But I'm here to tell you today that regardless of what challenges, okay, the markets give you and they pose to you as we move into this year 2025, if you have a valid working process in place, a process, okay, in which you believe in, a process, okay, whose knowledge, okay, you have, and experience, okay, which you have, okay, to train it, and experience, okay, comes, okay, as you trade more often, as you get along more, okay, into the process. The experience, okay, comes in, okay, and it's just a subset, okay, of all that, okay, we keep doing. But if you have that knowledge and you back it up with experience, you're going to get some consistent results from the market, and getting those consistent results is the job of a trader. We are not here, okay, to get those, one wins and one big trade in a month, and that should not be the mindset, okay, of you as you approach the world of derivative trading. The whole process is about getting small wins and getting them consistently. You're not that one win kind of a guy. You're not that one streak kind of a guy who gets one trade and then, okay, settles down and does about 15 losing trades after that. No, you're not looking, okay, to be that kind of a trader. What you're looking for is a trade, to be a trader, okay, who gets a consistent process done, a consistent work done, and a consistent result done over a period of time. And that always, always, always translates into a healthier account, right? To get to that, as many successful, profitable traders will tell you, to get to that, there is a lot of work involved, and there is a true process, okay, behind every single person who works the markets. He's got a strategy, he's got a plan, and he's got a way of approaching this. Right now, I speak to you, okay, via the medium of market profile and order flow. It's something I know dearly, and it's something, okay, which I utilize, okay, in my day-to-day trading. Something, okay, which has worked for me all these years, okay, I have been trading, right? And there are a number of ways, okay, in which you can trade the markets. There is definitely no single way of getting things done. But I share, okay, what I know, and what I've known is basically, okay, the evidence, through the evidence of not just myself, of a number of people in our community who have got similar results working this very process, which gives me the confidence, okay, to talk to you today about it, because it's not just worked for me. That's me in my trading in particular, but it has worked, okay, for a large number of people. And I believe that if there is something, okay, which works over time, over a group of people, over a large number of people, and that is a valid process. Some things, okay, can work with one individual one time, right? Some things, okay, can work with a few individuals sometimes, but something, okay, which consistently works with a number of people a large number of times, okay, large number of times, is something, okay, in which, okay, you have to pay attention. And we've been doing that. We've been, okay, working, okay, out on these processes and these methods, okay, of trading. And as we head into a new calendar year 2025, this is, okay, something, okay, which is giving us a lot of excitement, because in the past 2 or 3 months, we've been witness to some super clear signals. The markets, okay, you can say, okay, have reduced volumes, but the volumes, okay, which have been left are super clear volumes, and they've been giving us very clean, definite signals to trade. and that is okay what is exciting for us as we move into the coming year, right? So let's have a quick look at charts, and then we'll talk a bit okay about what is the proper process okay to trade in these markets. I have a nifty futures chart on screen, and no doubt okay some of you have looked at it, and there are a lot of elements okay which go into the making of an order flow chart. So let me just zoom out and bring to you larger variation okay of this screen, and we get that okay through these candlestick charts. And this is okay where the market has been. So it's come down, it's come down, okay, it's come down, right, okay, from this zone okay where it was around that 24,800 zone, okay, met a lot of supply along the way. And these pink ones okay are where your initiative sellers okay had come in previously, right? And for a long time okay there was only I as initiative sellers in this down move. But in the past two sessions okay we've been witness okay to a lot of initiative buying, and these are the yellow ones okay which give you that initiative buying, and we got about three of them, even one okay today. And the market has consistently okay held the lows okay of those IB bars, which is okay what is creating okay that move up okay which we've seen. So we've seen a market which has moved lower, okay, went into a balance okay so to speak, and within that balance also the dominant party was the supply, the sellers. And now okay we are seeing a market okay which is wanting to move up. So there is always a chop and a change in the markets. The markets are not always one way up, or they are always one way down, right? There is always a time okay when the market okay would go down, it will pause, and then okay it will start going up. To identify these points okay where it stops going down, to identify points okay where it is started going flat, and then identify that point okay where it starts turning around a bit, okay, is the job of us as traders. And if we can do this job better and better every single trading day, that's all that is okay left for us in the markets to do, to identify the trend clearly, know what is the bias at place, and to place our trades alongside that bias. Right now I know okay a lot of traders okay out over there in the general market okay they like to trade okay a market okay which goes up all the time, right? This is what we call a bullish market, and it's the more easier market to trade, right? But what really happens is like okay all through December we had this okay time okay where the market okay went down, right? We had okay market okay which was probing lower. So there's always opportunity on the downside also, as well as okay there is an opportunity okay when a market okay goes sideways, and you can be a good writer of straddles, strangles and all. So what we have to do is like as we head into a new calendar year, the first message okay which I give okay to the team which is trading with me is not to understand okay that there is only one way in the markets. There are actually okay three ways to trade a market: the up, the down and the sideways. And the more open you are to these three possibilities of trading a market, okay, the better will be your results in the market, because you're opening yourself to a lot more opportunities, right? If you just keep a bullish mindset, and no doubt okay the market okay goes up all the time, you lose out okay on moves okay like these. Okay, this was almost a 1,000 point drop. You lose out on this, and you'll end up okay being frustrated okay through it, and then you'll end up okay throwing good money in the market, and then okay you will end up okay destroying a trading account because you're just biased bullishly. No, what we advise is be open to the movement of the market, be a follower of the market, be a person okay who knows and understands okay where the bias of the market is, where is the dominant trade in the market, and trade alongside it, right? So today okay what we're going to do is we're going to try to understand the market in terms of where the signaling is via order flow. And for us, that signaling is very simple. There are a number of ways okay in which you read an order flow chart, but the best way, and the one okay which is going to give you okay consistent results over time, is to look for these signals okay which we call the IB30 or the IS30 signals, right? So I'll just talk to you about one of them today, and you can okay go back okay and look at, there are about 6 different ways of looking at order flow chart, and there is a hierarchy involved over here. So when we talk about order flow, Let me just be very clear over here. When we talk about order flow is a sum of about 6 or 7 different elements put together in the market. It's not one thing, or it's not just one thing which moves the entire market, and then you say that this particular thing is called an order flow. So amongst the 6 things, we count initiative buying, initiative selling, IB and IS signals, then responsive buying, responsive selling, RB and RS signals. Then we talk about liquidity of the market, which is evident from zeros in our charts. Then we talk about COT, the commitment of trade. There are elements which go into the making of that COT. So that tells a story by itself. Then there is the VWAP, the VPOC of it, the largest concentration of volumes, both in the bar as well as in the day. They have a story to tell. So all that is explained in the orientation which we have. So if you go to the user manual or even the orientation, right over here, the user manual, this will tell you where the elements of order flow are. So I just spoke to you about the liquidity, the COT, the OI, the volume clusters, imbalances, the RBIS. All of this put together make an order flow chart what it is. Today we're just going to train our focus on understanding one element of that chart, which is the IB and IS signals. And the easier way to do it for a number of traders is to focus on that 30-minute bar, right? So I've gone to a periodicity which is about 30 minutes right here. I've chosen the 30-minute time frame, and when I do that, I get my entire chart in a 30-minute time frame, right? And what I'm looking for is this particular bar, which is green, and then we say that this is an IB candle. Now these bars, whenever they appear, they are a little bit different, and I'll just walk you through how best to trade them in a minute. But let me explain to you that whenever these bars show up, they tell you that there is a change happening in the market. There is some people who have come in and pushed in aggressive market orders, like all these greens over here, large sizes. And this bar has to be treated very differently from the other bars in the market. So this one is a special player for me, and I'm gonna give him a lot more weightage than any of these bars over here, even though price moved higher. Because when this fellow comes in and he becomes an IB bar, there is a bigger change happening in the market. And over a period of time, if I'm just focused on the role of these IB bars, if I'm just focused on these bars where these IB bars have come, I'm opening myself up to a lot more possible, probable, good trading opportunities in the market, right? So this is a bar which came in at 115 today, and you'll recognize that by an IB signal at the bottom of the bar. No, none of these other bars have this signal. And then we change the color of the entire bar so that it stands out. This will be green in the order flow chart. In the candlestick chart, this will show up as yellow. I'll just explain to you why and how it is important in a bit. But let's just go back and see where the previous IB bars have come. So this was today's session. We had one IB 30 bar. Yesterday's session, we had two IB 30 bars right here, and the first of them came in aggressively here around this 23,805 mark. So this is that IB bar which came in, and you can say that the market got a second wind right over here as soon as this IB bar came, right? So this is the high, this is the low of the bar, 23,805, and this is the low of the bar. What we do is as a working valid process, when this IB 30 bar is formed, or for that matter any IB bar is formed, and can happen in 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes also, we wait for the high to be crossed, and we become buyers above the high of the bar, okay, with a stop loss below the low of the bar plus a small filter. So this 23,805 is not really an absolute number. You don't put a stop loss at 23,805. You give the market some leeway around here, say about 5 or 10 points, not more than that. And then you put a stop loss right below it, and you trade with a positive bias. So two things should happen whenever you see IB 30 bars, and I'm saying this because I'm on a 30-minute time frame chart. Two things is happen. One thing is you're quickly understanding that the bias of the market is changing. Now, what do I mean by that? When I recognize the bias of the market has changed, I'm no longer looking, when I see an IB30 bar, I am no longer looking to buy long puts into the market, right? I'm no longer looking to short calls in the market. I'm no longer looking to short futures in the market, right? See, the problem is a lot of traders, they enter the market and they do not have a clear bias to take. They do not know whether to long, short the market, and they are randomly trading all over the chart. But once you are clear, that there is a certain signal in place, and then you have to adopt to that bias, which is a bias given by the big players. So this IB30 became IB30 because there are a lot of people who built a lot of greens over here, right? So this is an entirely strong demand bar, and the next bar also had strong demand, and the low of this bar held, right? And they would make their best attempt that they come in this bar, they would make their best attempt to protect the lows of the bar. This is something which we have seen very, very often, and this is something which works for us. So this is 23805 buyer. Around 145 we got another buyer, 23964, and his low was 23883. Now the difference between these two is the next bar, or the bars after that bar, the high of this bar was crossed. In this case, because the market closed 23964, that day the high of that bar was not crossed, so we do not take this as a valid signal yet, right? The confirmation has to always come above the high of the IB bar. Today that was crossed 23965, so this signal got activated, and you can say you can push your stop loss back up to about 23883, right? And it was not just crossed today at 23964, we went on to make a higher high. So we got another IB bar. So there in that up move, we had a little bit of selling which came in, and then the market reversed and got back into long. So we had another IB bar which came up over here, right here, 24,236, and again we saw movement above this 24,236. So this was activated, and 24,174 became the stop of the trade. So two things are happening over here. One is your bias is becoming clear. If you short when you see a IB bar, your short calls or your long puts or your short futures, you are losing money because price is going against you. So first thing you prevent yourself from going wrong. And 90% of the traders do lose money because they have no idea when to be long, when to be short, when to be sideways. So first and foremost, what you're doing is you're eliminating mistakes from the market. You're eliminating wrong choices from the market. You absolutely should know what is the correct bias to trade, right? Because price will move up in the direction of where the initiative buyers come in the market. It's volume always which leads price action. Price follows. Volume is the one which starts making moves, right? So these are the three IB bars today. Let's go back a few days and understand what the market was doing a few days back. So I'll just zoom out of the chart, so just to give you a bigger picture of what is there. And a few days back we had these IS30 signals show up, right? So this was another IS30 signal right here, around this 24,090, 24,100. The low of this IS was crossed the same session, so this signal activated, and then we got a trade over here which had this stop loss, and the market went lower. So this one was not activated that same day because the low was not crossed, but it got activated the next day. And you can see that this signal came in here late, and then the market dropped more. But this was the proper stop loss for that trade, the IS30 signal. And from here the market kept dropping right up to about 23,600, 23,700. So there were a few more IS signals before that, and the method to trade them is the same. You keep the stop loss at the high of the bar, and you trade in. So this is the IS30 signal which had come in a day before. The high of the signal is to be kept as a stop loss. The next day the market reaches up to that IS30 high, but it drops back again, and the market goes over here. There was a gap up over here, and the market went a little bit off, and there is a new bias always when a new series starts. So there are two rules which we surround these IB and IS signals with. And the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid for 10 bars. So if they came in about 30 minutes, they are valid for the next 300 minutes. So we always define our signaling in terms of time. One signal which is come in on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders what they do is once they get a signal on whichever chart, on whichever indicator they are looking at, they expect that signal to last them for a lifetime. That's not how the derivative market works. The derivative market is very, very time defined. Time is a very, very critical element of the way we work in our markets. So every single signal, every single message which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. The signal also cancels when there is an opposite signal in place. So you get an IB bar and an IS bar comes in anytime in the next session or two sessions, 3 sessions, that bias is cancelled. Because why? The IS bar is the one which is initiating messages, which is initiating signals in the market. There are more dominant traders. So always remember this: in derivative trading, the most current information is the most potent information. It's like reading a newspaper. You do not want to read last week's news today. You do not want to read yesterday's news today. What is happening right now? It's about 5:30. What's happened at 5 p.m. takes precedence over what happened yesterday at 4 p.m. Takes precedence over what happened last week. The current information is the most important piece of information, and living in the now is what the derivative trader should do. What is happening this minute, this hour, this 30 minutes, this 15 minutes takes precedence over all that has happened previously, because the market is giving you new information to work out of. Right? So this is very simply an example of how to work out with the IB30 signals. You can use that same method to work in an IS3 signal, a 3-minute time frame or a 5-minute time frame also. Right? So this is an IS signal which is formed over here on a 3-minute time frame, 24,252, 24,236. The signal activates below the low of the IS. So in this case, this signal is not activated. The low of the next bar and the bars after that was 24,238. 236 was the low. If it had broken below 230, I would have shorted this market. But just because there is an IS signal does not mean it's an active IS signal. The activation has to come in below the low of the bar, right? You can go back and look at this. This is again a green one. So 24,202 right here. When you can see came active over here, not really in a very, very big way. But the low of that bar, 24,202, was held. In fact, the lows came down to about 24,203 right here in the next few bars, and the market made up to about 24,268. So again, 225,202, there is a 23-point risk reward over here, and you get 1:1 on a 3-minute chart or a 5-minute chart. You should be happy with it, and you should get positive results as long as your stop loss is not violated. So what we generally seen, because there are big players in all these IB bars, and all these IB bars will always be dominated by big buyers or big sellers, you will see generally the lows of that bar being held in whichever time frame you are. I showed it to you in the 30 minutes. I'll show you in the 3 minutes. I can show you in 5 minutes, 15 minutes. Those lows are defended because these are people who are trading these sizes, right? They are not a random number on a chart. This is actually a big trader who's putting money to work. And what we believe in Orderflow is working with market-generated information on the side of bigger traders in the market, on the side of big money. This could be a retail trader, this could be an institution, this could be somebody who is. But I know definitely he's not a new guy or a new trader in the market, because nobody new in the market is going to trade 1,000 lots. Right? So this is a person who knows what he is doing. Anybody who trades big sizes, and he has traded the market before. And if he's putting 1,000 lots at work in the market, there's a lot more capital. That's a lot of experience required to trade that kind of a thing. More importantly, that he is not your 1 lot, 2 lot kind of a trader. right? So he knows okay what he is doing, and if he's putting money to work, he will defend that level also. So this is okay what you need to be careful about as you work with these signals, right? So the other things okay which are there in the order flow chart are your caught, etc. And I've seen a number of traders okay what they do is like they focus okay on only on one message, right? There is a hierarchy over here, and in that hierarchy today I've just spoken to you about the crown, okay, the jewel, okay, in that entire crown is that IB30. Now these have got different weightages, and maybe okay at another time okay we will talk about the weights over here, but for me in an order flow chart, the one okay which stands out the most in terms of weightage, in terms of the weight of the signal in the order flow chart is always your IB30 signal, right? Just think of it as your Nifty 50 with your Reliance, SBI, all these okay instruments put together. You will see okay that Reliance has got a higher weightage okay than the other thing, even though you're trading the Nifty 50, right? So there will be some okay which have got a higher weightage okay than the others okay which have got low weightages, etc., etc. So we give it a priority, and the proper way okay to look at all that priority and that hierarchy okay as we call it is to give a lot more weightage okay to the initiative buyers and the initiative sellers, right? Then okay you can say okay you can look at your caught, then you can look at the liquidity in the bar, then you can look at the volume clusters. But it is always a collection of all of these traders and selection of all these traders okay which make up the order flow chart. So you start off with IB30, IS30 signals, okay, you recognize them on a 30-minute time frame. Then okay you get good at recognizing them in a 3-minute time frame, okay, and then okay you understand a lot of context around those signals. So sometimes okay you will find okay that there is a big LLT buy or a big volume cluster who comes in, and then okay what he does is like he cuts off all the supply, right? So late into the day today there is a lot of booking okay which is coming up over here. So even though okay all this was happening, there is a lot of okay booking which is coming over here, and caught is red. So now you don't look at this as sellers coming in, you look at this as longs of the day, longs of the morning, booking profit. So there is a little bit of a nuance over here, there is a little bit of an understanding required over here when it comes to understanding what is happening, right? And for this okay there is a little bit of experience required, time given to understand okay how this puts into place, right? Now all of you who are here, okay, you are better than all the other people who decide to trade for whatever reason. But decision to make a to join derivative trading or to start a trading account is very easy. You and I both know just because okay you put money into a trading account does not mean that there is money to be made out of trading, right? So we always hit that SEBI registered notice that 95% of traders lose money, and you look at it and you would okay get a little bit disappointed, a little bit dismayed okay looking at all that numbers and all that disappointment out over there. But the fact of the matter is, if you just go level deep and understand okay why 95% of traders lose money, the answer is staring at you. And I will tell you okay why they lose money. That's because okay they do not have a knowledge, they do not have the experience, they do not have a skill set with them, they do not have tools okay with them, and they come to the markets okay thinking okay that the markets would give them easy money. The market okay is not here okay to give easy money to anyone, even people okay who are working with it for 20 years, right? So anybody okay with a strategy, anybody okay with a plan, anybody okay with a skill set, with a set of tools, okay, they go to work in the market, and then the market okay gives them the opportunity, and they capitalize on the opportunity, and they make money, right? So you and I okay who are here today in this room together, we are a little bit different okay from 95% of the crowd out over there, because we understand okay that it requires a little bit of work when it comes to understanding derivatives trading. There is work involved, definitely, and then okay you've got to okay have that knowledge, and that knowledge okay has to be backed up okay with a little bit of experience to get those consistent results. Now you are here, you made a good start, and I congratulate you okay because okay you've shown an inclination to learn, and that is something okay which will help you okay as you navigate the rest of 2025. You have to okay keep learning about these markets, you have to okay gain experience in what you are doing, and then okay the results okay will have to come to you. It doesn't work the other way around. The results okay do not come to people who have got no knowledge and the results definitely do not come to people who have got no experience. So you'll have to adopt it the right way. Get yourselves the knowledge about what you are doing in terms of a proper valid working process. Immerse yourself completely into what you are doing. This is not something which is done randomly. It's not like getting up in the morning, picking up a chart or an instrument, putting an order, and hoping that the trade works. No, it doesn't work that way at all. You got to have a plan. You got to have a process to that plan, and you got to back that process and plan with a lot of conviction, which can only come through a lot of experience, right? So you'll have to go through that. You'll have to take in a few bad trades, come back stronger, learn from those bad trades, become good traders, and then everything will become easier for you. There's a saying in our markets, making the first 1 lakh rupees is very tough. It takes a lot out of you to get that first 1 lakh rupees made in markets. But once you make that first 1 lakh, the second 1 lakh will come faster, and the third 1 lakh will come even more faster, and gradually it becomes easier for you. Just making that first one is the difficult thing. Once you get over that, things will work out for you. But for that, you'll have to put in that work. You'll have to put in those efforts to get going out over here, right? So as we go into this new calendar year 2025, I just want to talk to you about adopting a right process, about working with what you are comfortable with what you should be at. I've just walked you through a small element about what the order flow trading is all about, and I've used exactly what I've spoken to you about. These are the signals which we do every single day in our VMR room also. But my journey has been through a process of learning, and with that learning I've been basically fortunate enough to get some good experience knowing various conditions which I've given my setups, and that's come through a lot of observation also. I invite you also on this journey. You'll have to get familiar with your tools. I've given every single thing to Orderflow, and we have got excellent market profile and order flow charts with us, which help us in our decision making. It's all about those decisions, getting the demand and the supply side of the market right, knowing when the buyer is stronger, knowing when the seller is stronger, and going to work with that, right? So for those who are keen on how this is, I just wanted to again point out to you that we have an offer running. That is a 25% discount for you to use this excellent tool through this year 2025. It's valid until January 5th 2025. I suggest go in for the annual plan. This includes stocks as well as indices. Once you have a proper tool with you, and this will also give you an access to the ecos which we have, which I believe is something all of us should have. It's a minimum condition to enter the world of derivative trading. I've tried to explain a lot of nuances about how the market works in this ecos. So on this annual plan, you will have access to it, right? You will look at it and say, I want to do it monthly. Fine. You can do monthly also. You can do half yearly. You can do annually. What I recommend highly that you give yourself the right tool to work these markets convincingly, right? The other thing which we have is something called the VMR, where we come together and then we talk about these tools a lot together. So this is where we only talk about market profile and order flow, and we talk about executing based on all these order flow setups and market profile setups which are there. So the entire process is still market profile and order flow, and we have 3 plans over here. But all these plans include access to the training library. That's about 15 videos out over there. Includes access to live hand holding in market hours, where there is an audio session also every day, and we live, talk, breathe these markets 24/7, not 24/7, 9:15 to 3:30 p.m. whenever the markets are live, and you'll find us talking about this. And it also includes access to the same order flow charts which were there. So if you want to be a little bit more stronger in this journey which you're starting in 2025, this is the time for you to make that decision. A lot of people, New Year comes, they make a decision that they want to change something, but they just think about it and they do not make any changes actually. and 3 days later, 4 days later, 5 days later, everything is forgotten, and life goes back to where it was. If you want to make a change, you'll have to change something inside you, right? So that starts, okay, from the way you think, the way you act, the way you behave, the way you feel. You'll have to make a 1% change in that for you, okay, to have a different kind of an outcome. But what happens with a lot of people, they are the same set of programs, okay, which run Monday to Sunday. They are doing the exact same thing, and I call it a program because a program, okay, is defined to run a particular way, in a certain way, under a certain environment, and as long as the environment is the same, the program is going to give you the same output again and again, right? So yeah, the program, okay, gets controlled, okay, by power. The program, okay, gets controlled by net, and we have to make sure, okay, that the power and the net is always on, and as long as that environment, okay, remains the same, the program, okay, delivers the same output. Now, I don't want any of you, okay, to be those set of programs. The program, okay, puts in the same input, gets the same output. But if you change the input, if you change a little bit of what you are inputting into your trading lives, in terms of your knowledge, in terms of your experience, in terms of, okay, what you are doing as a trader, the output can change, right? If you're expecting change, if you're expecting, okay, something different, okay, to happen for you in 2025, you will have to take that decision, and you will have to make that change by yourself, right? So take that decision. It's your call, it's your trading account. I just wish you the best about in the way, okay, you're gonna be moving this forward. Whichever way, okay, you move it, I want to give you the very best, and I'll end off with wishing you happy and a prosperous, okay, new year 2025. Make the most out of this year. We are super excited about what lies ahead in 2025. We are definitely looking forward to a lot more stronger signals, and the market has become clearer. So foundation wise, okay, we are, okay, on the right foot, and we are super excited about what happens in 2025. So thank you all, okay, for joining up, and for listening to this. There's going to be a recording of this on my Twitter feed also. So also on YouTube, also youtube.com/vtrender. If any of you have any kind of questions, okay, feel free, okay, to drop them to me on my Twitter as well. Thank you all for listening in. I want you to wish you the best, and have a happy and prosperous new year 2025. Thank you.